moving average video. So as I'm doing some updates, I thought I would throw in the more in-depth uses of the moving averages because a few people are getting confused. First and foremost, there are two methods and ways of actually utilizing the MAs. One is for trend direction and filtering the overall trend. Second is to utilize an MA crossover in line with any of the other trade setups, strategies, and so forth in order to build that one extra confluence for a trade. Firstly, I'm going to go through the use of the moving averages on the monthly, weekly, daily timeframes, and I'm going to go through which timeframes we should more or less adhere to going forward, and how to make our analysis that one bit much more simple. Now, firstly, this is the Aussie dollar, this is the daily time frame. The moving averages, if I could just get rid of the fib there. Okay. The moving averages that we use, I've got my key levels on here. I haven't got any dailies on at the moment. Now, with that being said, let me just take anything off that isn't relevant right now. Okay, so moving averages. In the book, guys, the moving averages, we have the 8 EMA, which is the blue, and the 21 SMA. I am going to update those EMAs in the book. However, everybody who's done the online course further back in the video section, I've just actually deleted that video now to replace with this entire section. I did state that we have changed the moving averages since the book. So now we have the 8 EMA and the 18 EMA. The 8 EMA is the blue, the 18 EMA is the red, as simple as that. Let's put my thick preset on. Okay. I like my moving averages to be relatively chunky, if you will, because I like to base a lot of my trade entries from the moving averages as well. So let's get to it. Now, first and foremost, we always start on the monthly time frame. You guys should have your key levels on there. This is the Aussie dollar. Let me just run through it. So Aussie dollar, on the key level video in particular, we were building key levels around this region and this range, and we've built up and up and up. Most recently, if we take a look at the price action on the Aussie, 0.7750 was a strong barrier for quite some time. Very, very strong barrier for quite some time. Ultimately, we were bouncing between 7,750 in this region right here and 7,400. So 350 pips from top to bottom. Now, on this monthly time frame, we can see the MAs were down. The MAs have been crossed over to the downside for years. We're looking at around 4 years, just over 4 years now. If we look at this, we crossed over at the break of this consolidation region right here. We crossed over, we broke through, and the MAs remained down for quite some time. We came in, out, we guided the trend down, and so forth. Coming into this region and this range, the MAs kind of come back together, and you'll see this happen quite often, especially in consolidation. Market bounced from highs to lows, highs to lows, highs to lows, and so on. But most recently, a good few months ago now, and those who attended the webinars and even on some of the Technical Tuesday volumes on YouTube would have seen that we rejected 7,400 with this free pin formation here, 1, 2, 3. So we rejected 7,400, we came all the way back up. When we did come back to the upside around 230 pips from 7,4 rejection, as you can see here as well, guys, the bodies of these candles, we spiked below, closed above, spiked below, closed above. The bodies of the candlesticks closed above 7.4, so that was a very, very clear rejection of that area, and we closed to the upside. If I remove these for a moment, we can see the MA's crossed over right here, right behind that candlestick formation. So we got the crossover and a break back above the weekly. Remember, that's a monthly resistance, that's your weekly support. At that time, that was weekly resistance. We broke above the weekly resistance, so it's now support. The MA's crossed over just behind the candlestick. That was the first time in 4 years. So it's always good to make note, again, when you're doing your standard analysis, whether it be writing down on your notepad or also doing your annotations and then screen saving, and making a screenshot and saving them into your folder. It's handy to note that we also should look at the monthly firstly to see which direction, which state the moving averages are in. So if we get a crossover on the monthly, or the moving averages are coming together on the monthly, just combine that with the key levels and also the candle formations as to what we're seeing, because it can act as a further warning going forward for a trend direction change, as we did here. So once in 4 years, that is pretty damn relevant. Another example to go alongside that is the Euro USD, because we had similar price action play out around the same time. Now, Euro, it was actually 3 years since the moving averages crossed over to the downside. Monthly candles remain bearish, bearish, bearish. Again, key levels, guys. I've had this range on the Euro for ages now, and we were bouncing from top to bottom. Okay, so top to bottom, top to bottom. This range was slightly larger though; it was 950 pips. However, more or less at the same time, if we look right here, then we look at the Aussie. Okay, we can see that we had a very, very bullish candlestick on the month, and then we had the crossover as well. The crossover here and on the Aussie, can you see that it happened before the resistance was broken? So we have the resistance level right here. The crossover occurred before the level was broken on Euro and also on the Aussie as well. So crossover and the price was still below. What happened here on the Aussie, we pulled back and we retested 7575. Look how accurate that was. Retested that, so it broke the resistance, retested it, bounced straight from the moving average. Here we didn't really get a retest of the MA or the support. However, we did in fact break to the upside on both occasions. 1.1450 broken, 0.7750 broken. Now, the rules of the key levels, I've already gone over this in a previous lesson, is that if a monthly is broken and a weekly candle breaks above, so if we do get a weekly closure above that, as we did right here, we are now looking to go the price to run to the next key level of resistance, which is obviously the weekly, and we are set up for that on all of our time frames and all of our pairs. Euro, we broke through on the weekly time frame. That was the weekly breaker there. We kept our head above, and we came up to the upside. 1.1925 was missed by a few pips. I'm still expecting that to go and test that very, very soon. Now, it's always handy to keep an eye on the monthly. However, as a note, please jot this down. The monthly time frame can lag. The monthly time frame can lag. So the best time frames to utilize the moving averages on for trend direction are going to be the weekly and the daily. If the monthly is in that direction and aligned that way, that is great. Also, please note there are two types of trades that we can enter. There's one where we jump onto a trend, which is known as a trend continuation move, where we're actually jumping onto a trend, expecting new highs or new lows, whichever direction the trend is running in. And number two, we have a reversal. A reversal trade doesn't need the moving averages to be crossed over in a certain direction, as to what I'm going to go over now. I'll come back to that afterwards. So let's start with the trend continuation move. When we're doing our analysis, we're looking at the weekly and the daily as being our pointers, our filters, if you will. Now, if we look at the Aussie dollar over here, looking at the Aussie dollar, we can see that the MAs are up here on the weekly. The price has rebounded from our key level right here, 7.4. Price has rebounded. We got the crossover to the upside, same time the actual monthly crossed over as well, which I wouldn't say it's rare, but it doesn't actually happen too often. So the weekly crossed to the upside. We also need to read, have we seen any higher highs, higher lows here? 1, 2, 3, maybe 4. Okay, so the MAs are up over here on the Aussie. To go in line with that, the daily, let's have a look at the daily moving averages. The daily moving averages are also up, yeah? Daily moving averages are also up. So at that point in time, once we rebounded from 7.4, if the daily and the weekly are in alignment with each other, both pointing to the upside, ideally, and it will make sense to do this, is we only want to find trades, bullish trades, trades to the upside, longs, pullbacks and longs, okay? So here in particular, What we can often see is, again, I'm going to go over these other setups afterwards, how to actually trade from the moving averages, i.e. rebounds like this one here and this one here. But guys, what we're looking for is if the MAs are up on the weekly over here, let's say, so up on the weekly, and you are going to get this because sometimes on the weekly we're going to get scattered price action, up, down, up, down. But here, these peaks and valleys are actually higher highs and higher lows on a smaller time frame. As you can see, the MAs have held up quite well. I'll get to this bit over here in a moment. But on the daily time frame, what we're looking for, especially, we can implement Fibonacci into this, A, B, C, D, A, B, C, D. We can implement our candlesticks into this as well. So the MAs, if they are both up on the weekly and the daily, we only want to go in that trend direction. So as you can see here, we're making highs, pulling back at times, so on. If we go over to the weekly time frame on the euro, let's take a look at this. Weekly on the euro, it's been up for a while. As you can see, again, similar price action. 1 week up, 1 week down, 1 week up, 1 week sideways, consolidation, consolidation, a rebound straight from that ATMA. Now, just remember, the moving averages act as support and resistance, dynamic areas of support and resistance. So again, we have our flat lines, our flat key levels of support and resistance, and we also have our moving averages, which are a little bit more dynamic, but we can still base trades from these support levels. A strong support level is the ATMA. This follows a trend as a trend line, if you will, and you often find, especially on a daily and a weekly, if the market pulls back, it often pins to it, so it'll leave a spike through it. Sometimes the body will close back above. That's a great rejection, ready for an upside in this case. Or sometimes it will just tap to it and then rebound as well. So just remember, it bashes into it as resistance or support. So here, support up, and so on. So weekly is up on the Euro USD. Now to the daily. Now, by all means, the moving averages can cross back over. Let's say, for instance, we have the weekly pointing to the upside. However, the daily, the market tends to pull back and the moving averages may cross back over. If the weekly is still looking strong and you've done your analysis and let's say euro is pointing to higher highs or to go into an area of resistance, if you will, the MAs are going to follow suit, especially if you have the monthly up, the weekly up. The daily might, come into equilibrium, sideways consolidation, cross over slightly and then cross to follow the weekly and the monthly. Now, looking over here, as you can see, the ATMA is guided. This is another example. I'll cover this on a further video. We've come into the moving averages. We've created a new higher low. Here we have 3 pin. 1, 2, 3. 1, 2, 3. Higher low, into higher highs, guided again, spike through, guided. And as an example, the market is consolidating now, but I have my key levels on there. I have my daily levels on there from the daily videos and the daily steps. So again, I have levels to ensure that I'm not just going to go and press sell if it crosses back over. At this point in time on the Euro USD, the weekly moving averages are still up. Monthly are still up. But just because we've made these highs here and we're in consolidation at the moment. But look at the daily, look at the price action over here. If I just remove this out of the way, we have 3 pin formation, a few spikes, so many rejections around here. Euro keeps coming down, but it keeps getting forced back to the upside. It is very, very messy, very choppy, and it is quite difficult to read at times. But when the market is difficult to read, if you revert to the moving averages, look at the MAs here. The daily is still up. The daily are still up. So in this case, riding the trend upside is further expected on the Euro USD. And when we are marking on our trend formations, higher highs, higher lows, that's the most recent higher high. That's the most recent higher low. So now we're expecting a new higher high. In conjunction with a higher high, it could just maybe even breach it by a few pips. We also have 1.1925, which, due to the monthly break, the weekly break of our monthly resistance, which came through here, the rule is, which is covered on the key level videos and key level section, 1.1925 is our upside expected target, the 75% chance our next weekly will be met, and that's our weekly. So measuring all of this up, Euro, even though it's having issues at the moment, sideways issues, I am still expecting the pair to go to 1.1925 over here. With that being said, if I look at the Aussie dollar on the daily, As you can see there, we came. Sometimes, guys, you can just remove the candles to just get a clearer view. MAs are in fact up, but we are a little bit sideways and all over the place. This is actually a fib move as well from the previous fib video. The last video, fib retracement, that's a 4-hour high low into the higher high. We are in this region. This is a daily. Okay, and as you can see, this fib was actually breached and then it came back into it. If I still take this into consideration, okay, take this into consideration and now move from here to here. Okay, mini fib move because that one was breached. And that's a new precise low. A, B, C. I can tell this is actually a 4-hour Fibonacci as well. So we have A, B, C right at the 61.8. Sorry, I'm expecting Aussie to go higher at the moment. So taking that into consideration, mixing fib up in the mix with our MAs. The MAs are crossed back to the upside. 3-pin formation here as well on this 4-hour time frame, on this daily time frame. Sorry, 1, 2, 3. And I'm going to go into the specifics of the closes above the MAs, closes below the MAs, how to base trades from the moving averages itself in particular on the next video. However, so with that being said, the weekly's up, daily's up, but if we look at the weekly as well, the weekly has remained up. And again, I'm going to cover this further on another video, but we're going to get spikes straight through the MAs. Sometimes we can spike right in between them. Sometimes we can spike right to the red one, the 18. Anywhere in between is a very valid area of support as well, which can hold the pair, whichever pair we're looking at, up or down. And these are my favorite setups, sir. So we have 1, 2, 3-pin formation here on the weekly. We're banging our head on this resistance level. I'm expecting it to make new highs, very, very similar to the Euro USD. However, we spiked through it, so it's rejected it. At one point, this candle here was a full red candle, born back up, so we rejected that. So looking at that on the weekly time frame, we can put into place MAs are up on the weekly, and we've also rejected the MA. Coming down to the daily, we can try to put this together to see where we could find a decent and valid entry going forward. And as I say, I'm going to get to that afterwards. Another example, let's look at the GBP AUD at the moment. First, we'll start on the monthly. So monthly GA, if we look at the moving averages, I've got all my key levels on this. Pair's a beast, absolute monster. We have the monthly moving averages, which are down. Now, looking at the candles and the price action, I'm going to just remove a few of these lines. We have a spike right up to the 18 EMA, and then the next month we've closed back below. Closures above and below are very, very vital when it comes to moving averages too. We've closed below. Next, we've spiked above, closed back below, and then this month we spiked up to the blue at EMA again. So remember, this is just resistance. Here it was support for this candle. Then it was support when this candlestick opened. As this candlestick came down and closed below, it's now broken that EMA support, and that EMA support is now resistance on the closure of this bar. We've opened, we've gone up to the highs, we've breached the resistance, however we've rejected it and closed back below. So now this again is resistance still. It's resistance because it's the closures here, it's resistance. Closures here is now resistance. If we look at current monthly, we came back up to test that resistance. And now currently we are down here. So we're still below that resistance, resistance, resistance. Combining this with key levels, it just takes some time and patience and dedication. We are now under various levels of resistance on the monthly. Monthly's down, strong. Coming into the weekly, weekly's been a little bit of a mess recently, to be honest. However, we have a 3-pin formation, 1, 2, and 3 at resistance. Again, we've closed back below the moving average resistance. Boom, resistance. And seeing there are 2 levels of resistance, we have the crossover there as well now. Market, because we were at these lows on the GA, what's happened is we've banged our head 1, 2, 3, 4 times on 6,500. Very, very key and precise level. But we've also spiked through and retested that resistance once more, as you can see, and we've come into the central point of the moving averages. So this is still acting as resistance. We're below resistance again, and we've also closed below 6,500. Next bar, spiked up through the ATMA, closed back below. We've closed back below. Resistance is strong here. And then again here, we're just lurking down these ends. 600 is our next monthly support level, which I do believe can be met soon. But let's take a look at this on the daily. Daily MAs. Okay, so over here, boom, counter trend line break. We have a reversal, bearish engulfing, coming back below 1.7. We have the breaker. And then when we had the breaker right here, what we can also see, guys, MAs are down. So this is resistance. It's acted as resistance for quite some time here. Due to the fact that we came into these lows, market started to consolidate and so on, we came outward. I actually thought at this time in particular, these were going to be the lows. Okay, we broke above 6,500 here, as you can see on the daily. But on the weekly, we didn't get the full break. I'll get to that in a moment. So on the daily, I was prepping, I was getting ready to go through my analysis and maybe reinstate this as a trend reversal. However, remember the rules. This is the reason why. So 1 second. We broke above, nearly tapped 6,750. However, we closed the shooting star. But look at the moving averages, they were still pointing to the downside. This action here, 1, 2, and 3, the daily breaks. The reason why we suggest a weekly candle has to close above or below the monthly range is because of this. Look at this now, up. Look at the weekly. Boom, massive spike, massive rejection. Look what happened afterwards. Rollover eventually. As you can see there, we spiked through the moving averages, and that's the price action here on this daily time frame. We came back below. It was a very, very confusing time for GBP AUD at this moment. MAs are still down throughout all of this mess. So we can actually filter out mess with the MAs. So again, if the monthly is in that overall direction, that's absolutely fantastic. If the daily and the weekly are in the same direction, that's great. As you can see here right now, we've come in, we're still below the resistance, 1, 2, and we've also combined that with 6,250 resistance. We are now looking at GA to come down as long as we are below those moving averages. Hope that makes sense. Go back, take some notes, and on to the next video.